Good morning, everybody. It is about 9:20, Sunday morning, May 22nd. Been a little while since I've touched on the markets here, and I'll make this video here today because we're in the range where I told myself that I was going to start buying based on my primary expectations. So I want to touch on some of those things, and then I'll issue a warning. So back in the September video, we were pretty much talking about how we expected the market to, wave its way back into a low here in the 39.70 area, right around this support level, and then we would see some kind of a corrective rally before a large decline. And right, the market's given us that so far. It's possible we're only in this area, and we're going to see a wider flat correction. But this low or this low is where I had expected the market to be in this time frame. If we were looking at the 21-day moving average of the put-call ratio, we had noted it was incredibly elevated and that it was likely to get back here to the green line. We had noted the VIX, and we said that it's probably all we're going to get here to the downside, and that the VIX had to go up. Keep in mind this. I view this chart inverted, so the chart going down is actually the VIX going up. Right. So I wanted to see us get back into this area, and that was going to be a safe place for me to start, releasing some capital into the markets, as indicated by this chart. Bitcoin. We had talked about how we had 5 down into this area, and that did not bode well for seeing this rally take shape, and that we had thought this would turn into a 3-wave bounce before actually correcting down into this red box now, and then giving us this final rally. And the dollar, we thought the dollar was embarking on a rally, and that would be impactful to equities, and that once that rally completed, maybe we could see some upside in the equity market. And pretty much all of those things have played out as I wanted to see, right? So, the S&P 500 is back into this area where at least I wanted to see a corrective rally take shape. Maybe that's going to be just one standard flat. Maybe it's going to be a wider flat correction before lower, but this is the area where we thought we would see that support. If we're over there looking at Bitcoin, right, we came right down into that area that I thought was going to be supportive. If you look at 21-day moving average of the put-call ratio, we're right back into this area where the market starts becoming supportive, right? Ultimately, I've drawn this yellow line on here. This is where larger bottoms have taken shape, right? Bottom, short-term bottom, right? So back into that area where bottoming should take shape. If we look at the dollar chart, I've actually drawn this a little bit differently. Now the dollar chart, I think I had about here, right? So we would be about here in the dollar's rally if this is going to be the smaller correction that I had talked about. So maybe that wider flat makes more sense, where with this much chop expected in the dollar here in the short term, right? Maybe that wider flat correction that I had drawn in this area makes more sense than just this standard flat. Maybe it's going to be 3 up, 3 down, 5 down for a wider flat. Makes sense. And the long-term trend indicator has also come down, right, from its lofty perch. And we had talked about how this indicator works is that once this cyan line flattens out below the green line, and then we see the orange line get down near the dotted yellow line and then break back up through the cyan, that's our buying indicator, right? So and it's on a delay because these are moving averages, right? The orange line is a 6-day moving average, and the cyan line is a 75-day moving average. So when we get the signal, you're going to be delayed, right? But it's a healthy delay that allows you to get in when the market has already made a turn, right? So all these things are where they're supposed to be, and I should be in a place where I should be chomping at the bit, right? According to all these indicators, I should be ready to fall in line like a good little boy and buy some shit. And man, that's just not happening for me. I got to tell you, I am getting more concerned as I watch the downside develop. You guys know that I focus a lot on how the chart looks and the shape that it's taking, and the shape that it's taking is not one that I like at all. If we just look at moving averages, and I'm not a moving average trader, but there is a lot of people who are, and it is not good when the 50-day moving average gets below the 300 and 400-day moving averages. That is never a good thing. It is often a sign of a much larger trend reversal, right? I mean, this is the chart of the NASDAQ that I'm moving around here, and the 50-day is the orange line. The magenta line here is the 400-day moving average. Same thing here in the Russell. If I had the NYSE up here, it would be doing the same thing. And the S&P 500 and the Dow haven't gotten there yet, but they're damn close. So you just don't see that happen except in your largest corrections. So we haven't had the 50-day go below the 400-day since 2009. So it's concerning. It's concerning. The method in which the charts are moving is concerning to me. Let me try and I'll try and explain this without getting too in the weeds here. With this move down, right, it can't be counted as an impulse. It has to be counted as a diagonal. And the measurements for this diagonal just suck, right? This is a very poorly organized move if I'm going to count this as a diagonal. And if I'm going to say that we're bottoming in this area, I have to count it as a diagonal. If we want to zoom in a little closer, like a 30-minute chart, and try to get a look at this, I have to say that this would be my wave 1, 2, an A, B, C for 3, 4, and then an A. I'm sorry, is this wrong? This is wrong. An A, a B, this is where the B should be, and then an impulse down for your C of 5, right? We would have to say that that is how we're moving. And man, that's just bad, right? Because the standard way I would measure a diagonal and the way that it should move, when I say should, I mean typically moves, is something like this. And I'll try to make that pretty bold here so that you guys can see it. That is a more typical diagonal structure. So it doesn't make up an impulse, and it makes up a very poor diagonal. And over my years of trading, I almost always fare better when I have this move, right? And I'm working on some smaller time frame charts, and I have a move here that does not work well as anything. It almost always works out better if I count it as a series of 1-2s in what ends up being more of a gestational period for a larger impulsive structure. Almost always works better if I treat it that way. So yes, there are many things telling me to buy this level, but they don't tank markets when into sellers, right? They all tank from oversold conditions. They all tank when there's buyers there just buying the crap out of it the whole way down. That's just the way it goes. And I'm concerned that we're in, right? Things are starting to look more and more like that to me. Now, a microcosm of this example occurred just this past week with the 1,100 point down day in the market, where things looked okay and then they just started growing to the downside. So if we zoom into like a 3-minute chart and we kind of look at that, we look at that movement. I forget where I'm at here. Here I am. Maybe I can get away with a 2-minute chart. Standard methods for measuring for me, I would have placed that as my original fib measurement, right? If this were impulsive to the downside. So this is very analogous to me to our present market condition, right? We're basically trying to force, in my opinion, this to be a diagonal, right? When I'm looking at the markets, people are trying to say that this is where we're at, right? Let's go back to the 30-minute view. It just looks like crap, right? We're trying to say that this is that same thing where you have that, diagonal pattern to the downside, and then that these are, making up some kind of a diagonal. And maybe, but the bulk of my experience says that when I have this pattern that is just, right, it doesn't make a good diagonal, it doesn't make a good impulse, I'm probably in for something bigger, right? So I kind of think that's where we're at in the market, right? It's getting to the point where I'm starting to consider this to be a developing impulse to the downside. And I'm growing more and more hesitant to have capital in the market. I don't want to be in the way of a really big move if it has a good chance of taking shape. So I'm not going to be buying the low that I said I was going to buy back in September. I'm going to be waiting and waiting to see some more positive developments. That doesn't mean I won't day trade it. I probably will. I most certainly will day trade it. And I may take some long calls, right, and rent some upside and keep my exposure to a minimum, but I am not going to go in there with the bulk of my portfolio and have it on the line for some overnight move to just freaking murder me. Not going to play that game. They're going to have to show me something more than they've shown me, because I'm concerned that we're right about in this red box if we're seeing this kind of shape develop. So that's my word of warning regarding how the charts are actually taking shape. It doesn't look as if it's making a constructive bottom to me. The NASDAQ can also help to be supportive of that. So let me take my drawings off the NASDAQ here, and I'm going to bring up a 3-week chart. And what I'm trying to do is highlight the 2000 drop in the NASDAQ. And that move is impulsive. Now, I see people all the time try to count that as 3 waves because it doesn't make their charts, right? Their charts don't make sense unless they count it as 3 waves. But man, stop being stupid, because that's a freaking impulse all day long, right? Just because your charts don't make sense, if you have an impulse in the middle of it, it's an impulse, right? It's an impulse all day long. And impulses don't happen in isolation, right? If we're going to, if I trade a lot on Elliott Wave, and if we're going to believe what it says, if we're going to believe the vast amount of history that we've seen in the markets, the impulses don't happen in isolation. It's part of a corrective move. Now, which part is it? Is it the end of a corrective move or the start of a corrective move? I don't think it's the end of a corrective move, because we didn't have anything big at all in the lead up to it, right? This is 1987 as it happened on the NASDAQ, right? 87, was the biggest thing around in the markets in that time frame. And before that, you had to go all the way back to the 70s, right, for the high interest rates. So I don't think this is the trailing move of a correction. I think this is the initiation move of a correction, right? And what I'm trying to show you guys is that the NASDAQ makes running flats in its wave 4 position all the time. And all the NASDAQ individual stocks, they all do the same thing. And I'm growing concerned that the NASDAQ is making a running flat on the larger time frame charts. And I haven't gone through and reworked all my charts to see if it works. This is a relatively new revelation for me. I haven't been playing them this way, but the more I watch and the more I see, the more I'm growing concerned. A running flat is either a 3 or a 5 wave move to the downside, followed by 3 waves up, and then a 5 wave finishing move. So if this were to be a running flat, it would be an A wave to the downside, a 3 wave rally for a B wave, and then a C wave that would get us the way things are projecting now. If we are actually seeing any kind of downside, we're probably going to overlap the top back in 2000. And that sounds so ridiculous. Believe me, I know. But I'm growing concerned. This can very easily be counted as an A wave, a B wave, and a C wave. And I don't view this correction here in 08 and 09 in the NASDAQ as large enough to be a companion correction for the 2000 correction. So I think we're right where it should start, if it is going to start. So can we have a correction that large and still be bullish? Yes, this would absolutely still be bullish, because as I said, it should be this correction in the NASDAQ, right? So the NASDAQ, we didn't start tracking it until about here, right? This is where the NASDAQ would be starting. This would be its starting point here, and then we would be in this move, right? Probably going to just overlap the top of this if this does take shape. And if it does, what actually, what would make sense? This is right. The bottom of the first wave hits the 61.8. The top of the B wave hits the 78.6. So this can absolutely be bullish on the other side of this in 2024, 2025. Again, if it takes shape, this is just something that's starting to concern me. But let's go to like a 1 month chart and spread some fibs out over that. It would bottom at the 61.8 and top out around the 78.6 before correcting, and then heading up as high as 269,223, right? Sorry, 327,000, something like that, right? It would absolutely be bullish. Just a thought, moments of concern. Maybe I'm chickening out here at the bottom when I need to be grabbing some sack and getting bullish, but growing concerned. The S&P 500, our standard expectations were to come back in here to 3,300 and then run higher. It can still do that. The NASDAQ can still do what it want. That big correction can still fit in the NASDAQ, and then that can be a perfect explanation for how we can have a large run in the NASDAQ and a large run in the S&P 500s still ahead of us. So trying to remain positive and trying to play it as it develops, but not feeling good. So hope you guys are feeling better, and hope things are going well for you. And try and enjoy some weather out there. Take it easy.